You can toe the line when it comes to investing. Choose the stocks you like one by one, or select Sector SPDR ETFs and add the diversification of an entire sector of the S&P 500, like financial. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
I'm DeLegge with ETFguide.com. We're pleased to be with Rick Ferri. He's the founder of Portfolio Solutions and author of the ETF book. Rick, great to catch up with you.
Thank you, Ron. Thanks for having me.
Let's begin by talking about some of the differences. Of course, exchange-traded products, that encompasses ETFs along with exchange-traded notes and other types of products. Just give us a spectrum of the differences between these types of various ETP products.
Well, it's interesting. I'm glad you used the right terminology, exchange-traded products, ETPs, because a lot of people take ETFs, which are most of the ETPs, probably 1,100 out of the 1,400 exchange-traded products are exchange-traded funds. But in addition to that, there are exchange-traded notes, there are grantor trusts, there are limited partnerships, and there's a couple of other cats and dogs thrown in there as well, but they're all lumped together a lot of times by the media as an ETF, and in fact, they're actually exchange-traded products, and there's differences between them. The structures of exchange-traded funds are based on a mutual fund structure. An exchange-traded note is actually a debt that you're letting a bank borrow money from you, and then the bank is actually using that money to invest in other assets, but they're giving you the return of a particular market. So you have a little bit more risk there because you actually have the risk of the underlying bank itself that's creating the ETF. So you have to understand how the different structures work. There's also tax implications of all the different structures. Most of them are fund structures, ETFs, but a lot of them are different types. And I think it's good that you brought up the fact that a lot of them are different.
Now, you kind of alluded to the discussion of portfolio management, and in assembling a portfolio, a person or a financial advisor has to be conscious of these different products, and it should affect or impact the way that they actually construct their portfolio, whether that's a taxable account or a tax-deferred account. Talk about that.
Correct. So part of the different structure, whether it's an ETF structure, an ETN structure, or a grantor trust, that the way in which they're taxed is going to be different. For instance, a lot of the grantor trust products and the partnerships and the limited partnerships are structured using derivatives. And so the way in which they're taxed and the distributions from those products are going to be taxed differently than the distributions from products from an exchange-traded fund, which doesn't use derivatives. And then you have exchange-traded notes, where a vast majority of these don't have any distributions. You pay long-term capital gains on the sale of the securities when you actually sell your ETNs. Now, not all of them, but most of them are that way. So it's important to not only know the underlying structure, but how specifically taxes may affect that particular fund.
One last thing before you take off, what about derivatives? Should there be concern on the part of investors about ETPs that use derivatives versus owning the actual securities?
Should there be a concern? Well, it's just another thing to understand about the fund. Is there a concern about it? 99.9% of the time, no. But 0.1% of the time where we have a financial collapse, yes. But if you're not going to sell, if you're just holding on to it and you're not looking for liquidity, I would say most of the time you don't have to worry about the fact that there might be derivatives in your fund.
Well, you just heard from Rick Ferri, founder of Portfolio Solutions, author of the ETF book. I'm DeLegge with ETFguide.com. Thanks for joining us.